Novated leasing. It has been a popular option to finance a car for a really long time now. It combines both the benefits of vehicle ownership alongside with many tax advantages and is something that should not be overlooked when looking to purchase a new car. In today's video, my intention is to offer some scenarios to demonstrate the workings of a novated lease and to identify situations where opting into one may be worthwhile. Now, just quickly note that this is a follow-up to my video where I already went and explained what a novated lease is in simple terms. So if you haven't watched that one yet and need to understand the basics before we get into more of the deep dive stuff that I'm going to be getting into in this one, I suggest you go and quickly give that one a watch. I've linked it down in the description below. So let's get on with it. The decision to enter into a novated lease requires careful consideration. There are many factors which will determine its overall worthiness for you, the individual, and your own circumstances. Initially, my plan was to create a customized spreadsheet that allowed users to input data points to then generate a response to determine whether or not it was going to be worthwhile for that person to actually enter into a novated lease. However, I quickly realized that it is not that simple. There are many data points which will determine whether or not a novated lease is worthwhile for you, and building that into a spreadsheet that anyone can use, a simple template, is just never going to be easy to put together, and it's probably not going to be valuable to the users because of how many factors there are that need to be considered. So I went back to the drawing board and came up with a simple set of rules that anyone who's considering taking out a novated lease would be able to basically apply to their own situation to quickly make a determination in a matter of minutes whether or not it's going to be worthwhile for them before they go and do all the nitty-gritty calculations with an actual lender and start wasting their time. That's what I'm going to be going through starting right now. Firstly, it is important to clearly articulate that a novated lease is not free. Your employer may offer it as a benefit, but someone is going to be paying for that lease, and that someone is you. Through finance brokerage, procurement fees, insurance commissions, so things like comprehensive and optional insurances, salary packaging fees, and aftermarket accessories like paint protection, dash cams, and minor damage repairs, which I would put under the heading of non-dealership accessories. The other thing is that there are 3 key questions that need to be answered, which will determine whether or not the benefit of a novated lease will be in the best interest of the person who's interested in taking one out. The first question that needs to be answered is, what is your gross annual salary? Also referred to potentially as gross annual salary. That is simply how much money do you make each year before you pay tax through your employer. The second question is, how many kilometers or miles do you intend to drive this car once you take out a novated lease? And the third and final question that needs to be answered is, what is the purchase price of the car you're interested in taking out a novated lease on? Everything offered in a novated lease boils down to the answers that I've just asked in these 3 questions. And from there, it's basically a juggling act between them to figure out how beneficial a novated lease would be for you. So let's do a quick example. Let's say you are an assistant earning a respectable $40,000 a year. You want to purchase a $30,000 vehicle across a 5-year loan period, and you're going to drive approximately 10,000 kilometers every single year when you have that vehicle. Without even doing the maths, chances are a novated lease is not going to be for you. The reason is, within Australia, on a salary of approximately $40,000, you're only going to be paying 19 cents on the dollar of tax for every dollar you earn over $18,200. Therefore, the amount of tax you're going to save on that is not going to overcome the amount of interest charged against the lease. Okay, so let's do another example. Let's change some of those metrics up a bit more. Let's say you're a junior engineer earning approximately $100,000 a year, and you're planning to drive that car a lot. Let's say 20,000 kilometers every single year. And the purchase price of this car is going to be $90,000. Well, chances again would suggest that a novated lease probably isn't going to be worth your while. The car that our junior engineer friend would be looking at purchasing is not really within the target market of what a novated lease is aiming to capture. Again, our young engineer friend most likely wouldn't recoup the amount of interest that they're paying on that lease compared to what they're offsetting against their tax as part of this entire calculation. It again does not balance out to be in favor of that individual. Okay, let's do one more, and hopefully this one might come out with a more positive spin. Let's say you're a teacher earning $80,000 a year and you're looking to purchase a $35,000 car and you're going to be driving it approximately 20,000 kilometers a year. At a glance, this would be the sweet spot. You're buying a cheap car, you're driving a lot, and your salary is not insignificant, depending on where you live within the country. At this point, a novated lease might actually be more beneficial to the buyer than buying it with cash outright. And I'm going to break it down right now for those who want to understand the intricacies within. Let's say you purchased that car for $35,000. In this instance, you pay no interest on that purchase, but you also don't get any tax advantages at all whatsoever. In this instance, you're $35,000 out of pocket that you'll need to recoup in some way or another. You've lost the use of that cash and also invested it into a depreciating asset. I'm just going to throw a number out here and say that with a novated lease, you might pay $10,000 in interest over the life of that lease. Remember that value, $10,000 is going to be pissed away towards interest if you were to buy that same car through a novated lease. However, here's where some of the kickbacks come into play. With a novated lease, you will avoid paying GST. In this instance, that's about 10% in Australia, so $3,500 should come off that total purchase price of the vehicle. Plus, around 20% of your finance is paid pre-tax across a 5-year period. That includes all of your running costs as well. Things like $100 worth of fuel or petrol outside of a novated lease is $100 out of pocket, not to mention that you're also going to be paying GST on that purchase of fuel. Under a novated lease, you pay for that fuel pre-tax. So that would save you, I think, 32.5 cents with our current tax brackets at the time of recording this video on a salary between $45,000 and $120,000 and $10 of GST. So your out-of-pocket expense would be $57 roughly instead of it being $100. The accumulation of these ongoing savings is the primary benefit of what Novate leasing has to offer versus other forms of leasing or buying with cash outright. Not to mention, these savings apply to other costs as well, with expenses such as insurance, servicing, registration, tires, and like I just mentioned, petrol. Now, for the sake of the scenario, let's assume that your cumulative tax savings add up to a whopping $15,000 over the life of the lease. Based on my calculations, that would put you about $5,000 better off than if you were to purchase it outright with cash. Remember from before that important number, $10,000, where I said in this scenario, we're estimating we're going to pay about $10,000 in interest over the life of the lease. Well, $15,000 of tax saving minus $10,000 of interest leaves us with a net of $5,000 more beneficial in this instance. And also don't forget that your money is going to be chilling in your savings account for a number of years before you reach the end of the lease and need to pay off in a balloon payment the last chunk of the lease. The main point being, in this scenario, at least your money that could be offsetting your mortgage or accumulating cash in a savings account is not going to be basically tied up in a depreciating asset for the entirety of the lease. Hopefully that summary made sense, especially when you view it from the 3 angles or 3 scenarios that I provided. The key takeaway, in my opinion, is that for the majority of people, a novated lease might not be for them. Before diving into a bunch of calculations, you should have a sense of where you stand and whether it's worth going further into the process to figure out whether or not it's going to be a good fit for you. Quickly, let's talk about the interest rate of a novated lease as well, because it might shed light on why they are usually higher compared to other loans. Novate leasing is usually a trickier finance setup. With a novate lease, the financer, being most likely your employer, pays the dealership the full purchase price of the car, including GST, and gets a tax credit later down the track. This obviously will come at a risk to the company and typically includes way more paperwork than your everyday typical consumer product purchases. I mentioned this in my first video and I had a few comments down below asking what the best or optimal lease period is, so I think it's worthwhile bringing up again. If you're aiming to squeeze out the maximum tax benefit for a novated lease and you're all cashed up and don't really have cash flow issues, a 13-month lease is generally going to be the sweet spot for most people. On a 13-month lease, you're paying off the same percentage of the vehicle as if you had signed up for a 2-year lease. However, you're only financing for 13 months. Therefore, you're paying less interest, but you're squeezing out 2 years worth of tax savings over that period. Plus, because a 13-month lease rolls into the second year of vehicle ownership, you will also most likely be able to claim a second wave of insurance, registration, and potentially even a major service, all pre-tax before the lease ends. One quick note worth mentioning, at the time of recording this video, there is a lot of chatter going on surrounding the removal of fringe benefits tax on electric vehicles within Australia. Simply put, a novated lease on an electric vehicle or a plug-in hybrid is currently an attractive option, especially for anyone earning over $180,000 a year, soon to be $200,000 with the introduction of stage 3 tax cuts. Stay tuned for that video in the future. Overall, novated leases are just another financial product which works specifically well for a very particular group of people. Novated leases are generally only for people who are in a top income bracket, who want to upgrade their car every couple of years or so. Otherwise, the tax you're saving might not offset the cost. Once you've run through the questions that I've talked about in today's video and you have a feel for whether or not a novated lease might be for you, if you do want to go further down that path, I encourage you to engage with your employer and someone who can actually crunch the numbers and tailor it specific to your situation to see if it would be actually worthwhile carrying one out. Just be sure, and hopefully what my videos have helped with in this instance is that you have a good understanding of everything involved and what you're looking for to get the most out of that novated lease before putting pen to paper. Do not sign anything without having a full understanding of what you're getting yourself into, because at the end of the day, it's a money-making business for someone and you are still going to be paying for it. With that being said, I hope you enjoyed today's video. It is a relatively complex and dry topic, but for anyone interested who has made it this far, I hope that what I've talked about has been somewhat insightful and helped you with your journey as to figuring out whether or not a novated lease is going to be good or not for you. If you did enjoy, hit that like and subscribe button. It is much appreciated. And as always, I will see you in the next one. Bye for now.